Hello options traders, Steve Gans here from OptionStrat, and I'm going to spend a little time going through the key functionality of OptionStrat. We're going to look over a period of 3 separate videos. We're going to look at the Build tab, the Optimize tab, and then the Flow tab, and kind of dig a little deeper into each one of these. I'll tell you that probably the most useful one to most people is the Build tab. You can see in the Build tab that it's broken out into novice, intermediate, advanced, advanced, and expert trades. There's over 60 different trades here, and these trades are pretty common trades, but of course you can also build your own trades. The one thing I want you to notice is down here toward the bottom, any of these trades that I select, you get a very detailed description of the trade down here, including whether it's a bullish or a bearish trade, whether it's limited or unlimited profit, limited or unlimited loss, and then it shows you how to construct that trade over here, exactly what you need to do in order to build out that specific trade. But I'm going to make it even easier. So if we want to build out a trade, I'm going to start with something simple here called a long call. And I should note that everything I'm going to share with you here today, I am using the paid version of OptionStrat. It includes some functionality that's not available in the free version, but everything I'm going to show you here on the desktop also is built into mobile functionality as well. So you can use this on a mobile device or, of course, a desktop as I'm doing here today. So I'm going to start with a long call. That's a very, very basic position. All I need to do is click on long call, and it instantly loads up a long call position for me. So the very first thing I want to do here is to enter whatever symbol I'm wanting to trade. Now SPY is already loaded into here, but you'll notice when I put a symbol in here, a little news thing pops up here. So this is in the paid version, and it gives me any news on the underlying that's current that I might want to consider before I enter my trade. So again, I'm looking at a very simple trade here of a long call. At present, SPY is trading at 483. This shows me that I'm looking at a long call in SPY, and right now it's modeling a 14-day expiration for me. So that expiration is the February 5th expiration, and it's selected for our purposes here today and at the money a long call of $483. Now there's a few different ways I can look at this trade. I'm going to start by looking in the table mode. We'll come back to the mode I was just in there a moment ago. But what's cool about table mode is right here is the at the money price, the 484, and we can see that I'm looking at this trade in a P&L mode. When I first start off on this trade, it's going to be essentially at a break-even point, and then over time you can see up here we've got the 23rd, the 24th, the 25th, the 26th, all the way out to my expiration date of February 5th in this case. So what this is telling us is at the 484 price, I can see what's going to happen to this position as time marches forward. And we can see that if the market does not move, theta is going to decay out from under this position until I've essentially lost virtually my entire purchase price. So my purchase price here is 489. If the market does not move and I have a $483 long call, that will fully decay over the period of this trade. Again, if the market doesn't move in my favor. Now, let's just say the market does move in my favor. Let's say that I enter this position in the morning, and later today, the market rockets up to 487. Well, if that were to happen, I would be up $209 in this trade. Or later today, the market drops down to 480. Well, I'm going to be down $183. And of course, I can also go out and look at any day and time. I can come out and see, well, if I get to Thursday, the market is up to 488, well, I'll have $142 in profitability in this trade. So those particular things, this is a way that you can look at your trade graphically and kind of see what's going to happen to it over time. And I said graphically, I should say in the table mode. We're actually going to look at the graph here in a moment. And this particular model is showing me profit and loss, dollar-wise profit and loss, but I can also look at profit and loss percent. So now the table is showing me the exact same thing, but it's showing it in percent modes. Then I can also look at contract value. I can see that, well, my contract, I'm going to spend roughly $500 for this, and this is what's going to happen to the price of the contract over time. If the market stays at 484, this thing is going to become worth less and less and less until at the end of the final day, it's essentially worth nothing. Again, that's that theta decay kicking in and the value of my asset, in this case a long call, diminishing over time. I can also evaluate this on a percent of max risk. Again, same principle here as it's coming in and looking at the maximum risk in the trade, the percent based off the max risk, which in this case, of course, is the same because my max risk is the same as my overall P&L here that I would look at. Now, let's look at a couple other things we can model here. I'm going to come back to profit and loss. And if I want to see more of a price range, right now we're looking from 484 to 494. Let's just say that I have high hopes and I think, gee, the market could go up to 500. Well, I can enlarge the range that I'm looking at. You can see now this goes up to 500. Or I can narrow that range. It's like, yeah, there's no way this thing's going to get beyond, 490. So I'm just going to model down to 490. And I can see that range up to 490. So again, I can change the range of prices that I'm looking at. Now, another key factor that all options traders need to know and understand is implied volatility. So as options traders, in some cases, we're playing the direction of the trade, whether it's going up or down. And of course, as we can see, that does change the value of this position as the market goes up or down. But just as important as the movement of the underlying is what happens with implied volatility. So if I am in this position and implied volatility spikes, we can see if implied volatility goes up to 20% and the market doesn't move at all, the market stays at 484, the value of or the profit in my options trade, the long call in this case, increases by $362. Likewise, if volatility drops out of this, I can see that if volatility drops down to 6%, well, I'm going to be down $152. So as options traders, it's critically important that you understand how volatility factors into your trade as well. Now, if I want to bring that back to whatever current volatility is, I just hit this reset button right there, and it'll take me right back to the current volatility that exists in this trade. So a couple of other things that I want to point out. If I want to change my expiration up here, I can do that. I can come and move this to, February 16th or whatever I want to go to. I can also scroll these. If I want to go out further in time, I can slide this entire bar left or right. Of course, I can do the same with the underlying, the option that I'm going to buy. Right now, I'm looking at buying a 483 long call, but maybe I want to buy something further down the chain. Now, if I come and buy something further down the chain, we can see how that impacts the overall P&L of my trade. If I go to 498 now, well, I'm up $1,200, somewhere in that range. But you can also see that I'm spending a lot more to get into this trade. This slider also swings back and forth. So I can dial this to whatever level I want to put in my option. Now I'm going to come back to essentially an at-the-money long call here. One other thing that I want to kind of point out to you here that I think is critically important is these green bars and these red bars. what those are indicating is they're indicating the amount of activity at those given levels. In other words, how many people are trading at those levels. As a trader, you always want to try to trade where there's liquidity, where the bid-ask spreads are nice and tight, that there's not a wide range between the bid and ask to where you would come up with some significant slippage. Slippage is not something traders want to deal with. So we want to deal with things that are highly liquid, and these bars, which again is a function of the paid version, you won't find those in the free version, these bars will help you in determining where the majority of people are trading, where the liquidity exists. So now that we've taken a look at this in the table mode, I'm going to take you to the graphs mode. Now, before I do, I want you to realize that the graphs mode is essentially taking a column here and plotting out a column. And what I mean by that is, let's just take a look here at the 29th. So if I come to graph mode, this is going to show a P&L diagram. If I slide my date all the way to the left, this is today. If I slide this to the 29th, so this, the 29th, is what you would have seen essentially as P&L if you looked at the table for the 29th. So, and what we can do now, again, if this is our trade and I want to see this in graphical mode instead of the table mode, I can now come in and I can see what's going to happen to this over time. As time marches forward, this thing decays and it loses more and more money if the underlying does not move up, okay? But again, this is a bullish trade, so my premise behind getting into this trade is that the market is, in fact, likely to move up. Now, I can also model the implied volatility here. I can come in and see, well, what happens if volatility increases? What happens if volatility decreases? So I can play all those different variables here and kind of model out how this is going to look. And of course, the range, much like it did in the table mode, it just shows me more of the graph. So I can, see, well, what happens if the market goes up to $510? Well, I couldn't see that when we were back at this point right here. I should also note here that all of the pricing and modeling here updates in real time in the paid version. If you have the free version, there's going to be about a 15-minute delay in pricing. So anyhow, as I'm looking at this, a couple other key things that I can look at is I can come in here and again, in addition to seeing volatility, sliding my date, etc., I can just slide my slider up and down here. And I want you to notice a couple things. If I slide up to here, for example, this will show me right up here what the current market is. Well, up here, the market would be at 486. And when I say the market, I mean, and that would be a 0.5% increase. Okay, but in addition to that, down at the bottom here, it's showing me the percent chance of going above that point or below that point on this specific day. So basically, on the day I'm on right now, there's a very low chance that the market would get above that 485 point. However, if I come back here, I slide out to a future point in time, and then I come take a look at this in more detail now, we can see that, well, if I look at this point in time, I think we were looking around 486, I can see that there's a 41% chance that I could be above that price point by that particular date, which is the February 5th date you'll note down here. Again, this is something that's part of the paid version as well, getting these particular stats that you can see right here and right here. Now, another thing I want to look at is this whole line across here. So this is going to show us key factors about our trade. I'm going to come back and slide this back to today, but we can see that the net debit, what we're going to pay to get into this trade, because in this case, we're simply buying a long call, is we're going to pay this $701 to get into that position. That also is our max loss in this case. So what we pay for a long call, that's the maximum we can lose. Our maximum profit is infinite. In other words, as far as the market goes up, this thing's going to run with it, okay? As this trade exists right now, it has a 33% chance of profit. Now, this is all stuff that's mathematically calculated using different options pricing models. Another key thing to know is what the break even is, okay? So, in other words, if I buy this particular option, and we go out to expiration, I am spending $700 for this option. So in order for this option to become profitable, I can't sit here at my approximately 483 price point. I need to be at 483 plus the roughly 7 points that I paid for this option, which means that my break even is up here at 490. So in order for this to be profitable at the end of the trade, it tells me right here what my break even is. The market has to go 1.4% higher in order for me to profit in this long call only position. The other thing that I have available to me right here is all of the Greeks. So I can come in and I can see what my delta is. Now, every options trader needs to get familiar with these terms. So delta basically is how the value of your position is going to change with 1 point of movement in the underlying. So if the SPY goes up 1 point, the profitability in your position should improve by approximately $56. Theta is the amount of decay. In other words, how much is this option decaying out from under you? You paid something for this with the intent of the price of the underlying getting above 490 prior to expiration. But while you're sitting here waiting, this thing is decaying on average $15 a day. So I kind of call that my holding cost. I have to pay $15 a day to stay in this position. A gamma is a measurement of how quickly, when the market changes, it's a measure of how quickly delta changes. And I'm not going to get deep into these, but just know that this is where all of your Greeks are, and you have availability, of course, to see and understand what's happening with those Greeks as well. You'll also see over here on the left side, we have a solid line, we have a I'll call it a large dashed line and a small dashed line, and then a cone of probability. So this solid line right here, this is what's called the T0 line, and this is the T0 line at halfway through my trade. In other words, if I'm in a 10-day trade, or in this case a 25-day trade, at 13 days through, I'm going to be essentially at this bolder dashed line. At expiration, I'm going to be down here at this more finite or small dashed line. So that's what this kind of plots out for me. It kind of gives me a little bit of an idea of how this position is going to move over time. So again, that I can better understand the position and how it's likely to be impacted on all of those different variables. So in addition to plotting out the value of the position, I want to show you something else that you really don't see other places, and that is the ability to come down and plot out delta and how delta changes over time. You can plot out theta and see how theta decay happens over time. So we can see that with this heavy bold line right here, that that's where our theta decay is going to be halfway through, and this is how much is going to decay out of this position when we get to the full price. So we can see all of those, and that's not something, again, that you normally see in option software. That's kind of something added here that you don't see elsewhere. And then I should also say that in the graphs table here, we can also look at the P&L as we've been looking at. We can look at a percent. We can look at the contract value. We can look at the trade based on percent of max risk. So all of the ways that we could look at it when we were in table mode, we can also look at it here in this graph mode. So the next thing I want to cover is going to be these particular buttons up here. And I'm going to actually start at the right, showing you the historical chart. So what the historical chart is this shows the value, and I can look at it either in line format or in candlestick format, but this shows me the value of that option. The top one here is my options price compared to the value of the underlying. So a long call is a strictly bullish position. And we can see that as the market ran up here, this long call just exploded in value. So that's really cool to be able to come in and take a look at the price history of a specific option and see how that option has moved compared to the price of the underlying. So let's come back now and say right now I've got one position, okay? I've got one open position or one open option that is part of this position. So I want to cover a couple things here. This is the one option that I have open. It says buy to open, and I can click on the little gear icon, and we can see that it shows a price of $7.01. Now, maybe the bid ask here was $6.99 to $7.03. Maybe I didn't pay $7.01. Maybe I had to pay $7.03. I can come in here and change this price to be whatever price I want it to be. I can also flip positions. I can, right now, I have how this is valuing my trade based on the midpoint. In other words, when I had that bid-ask spread, it's assuming that the current value of my option is at that midpoint, which is why I'm showing a slight loss, because you can see this little dollar symbol here. That means that I entered a price here, and I entered 703, and the mid is more like 701. So, and I can also go off the bid-ask spread if I want. The bid-ask spread is a more pessimistic way of looking at your trade. And if you're trading something that has a tight bid-ask spread, this isn't going to make much difference. If you're trading something that has a wide bid-ask spread, this can make a huge difference. And most people tend to model off of the midpoint because generally you can get in and out of positions around that midpoint. Before I get to save trade, I'm going to look at adding a leg to this trade. So right now I have just a long call, 483, and I'm going to come back here to look at P&L in the dollar range. And I'm spending, again, as we previously saw, $703 to enter this trade. That is my max risk. So what if I consider that to be a little bit more max risk than what I might want to take on in a trade? What could I do about that? Well, I can do a couple of different things, but the one that I tend to normally do is if I think that our market maybe isn't going to go up and past 490 between now and February 16th, I may come in and sell a 490 call. So I want to add an option. So I can come right here and I can say that I want to sell a call, and I can move that to wherever I want. I'm going to move it to 490. And we can see that when I move this to 490, look what it did to my risk. It dropped my risk dramatically. And I can actually come in here and I'll save this in a minute and we'll see how that changes back and forth. But for right now, I also want to show you that I can either come in and I can exclude that from my trade and re-include it just to kind of see how it compares. Or a better way of doing that is let me come in and I'm going to totally remove this option. So now that option's totally out of there. I'm going to save this trade, and it automatically provides a name, but I can come in and name this whatever I want, and I can put in whatever notes I want about this trade. Bullish trade, looking for market pop or whatever it is. And then I can put this trade also into different groups. I can create whatever groups I want and drop that trade into a specific group. Now, when I save this trade, couple other key things here, I can copy this link and I can share this link with anyone, anywhere. If I send them this link, it will automatically open this trade, the free version of OptionStrat, so that they can look at the trade and kind of see what you're saying, or or see your evaluation of the trade. So now that I have entered that trade, I have saved that trade. You can see it showing that we're down $2 right now. And again, maybe I want to come in, I'm going to close this window, and maybe I want to come in now and I want to add that short call that we talked about a moment ago. So I come in and I go to sell call, and I move this to 490. And we can see a couple different things happen here. As I zoom out in range, we can see the white line here is my old trade, and this is the new trade. And I go back and forth between the previous and the current, and I can see that without that short call that I'm selling against this being in the mix, I have $703 in risk. But then when I come in and I add that short call into the mix, this trade is only going to be $358 in risk. So my break even gets a little bit closer as well. And then I can also look and see how that impacts my Greeks. And again, I can look at that. I can go to previous, go to current, and all of that is updated instantly. So let's just say that I like this version of the trade. I can come in here and I'm going to sell this call, and we can see that the bid ask is nice and tight, 344 to 346, so I'm okay accepting that 345 price. If I wanted to put something different in there, or if I went and traded this trade on whatever platform, I can take the pricing that I got off that platform and I can come back and enter it here so that this is accurately representing my trade for me. But if I like everything about that, then I'm just going to click on Save Trade again, and I can overwrite my existing trade or save this as a new trade. Now, sometimes I'll save it as a new trade so that I can easily go back and forth and kind of look at, well, what would have happened if I didn't add this versus if I did add it. But in this case, I'm just going to overwrite the trade. Again, I can copy that link, send it to friends, whatever I want to do. And now this is the trade that I'm in. And we can see, if we come back here, that my net debit is 358 on this trade. Obviously, I know this is a bullish trade. My break even is much, much closer now at 486. Previously, it was up around 490 and change, somewhere up in that area. Now I can also come in and look at my historical chart again, and we'll see that now it's basically plotting for the spread that I put on, not the individual option, but the spread. And then the final thing I wanted to share with you was that if you come under your account, you can go to Save Trades, and I can see this particular trade that I just put on. That's this one right here, and I can click on it, launch into it the way we were just looking at it, and it pops up with the P&L and shows me any news on that trade so that I can easily keep track of it. And if for some reason I get to the point where I want to close this trade, I can click on the gear icon, and again, this will show me all the details about this trade, the cost basis, the total return on the trade, what options are built into the trade, and then I can also come down, share the trade, but I'm going to focus on close the trade. So if I want to close that trade out, and maybe I go to my platform, I close this whole trade out, I can enter again the price of each of those two legs if I want to be extremely precise on it, and then hit close trade. And then once I close that trade, it's going to show up here rather than being in the active trades. It's going to show up in my expired or closed trades section. So all of these are alphabetical order, so I could scroll down and see that if I wanted to. So that should give you a real good rundown of the build tab. Again, one of my most heavily used areas of OptionStrat. So that's it for this video. Let's party a little bit, and then I will look forward to seeing you as we get into the next video on the Optimize tab. So see everyone there. Take care.